Hi, everyone. My name is Neelam Brar. I'm the founder of Blockhouse. The mission of Blockhouse is to bring together innovators that are producing technologies and applications that are changing the way we do business, and connecting them with investors as well as advisors and the executives within the industries that are possibly being challenged by these new innovations of technology. The opportunity within the Blockhouse network will be that once you become a member, you will be constantly invited to talks and panels that are talking about maybe what you guys are questioning in your boardrooms. And more importantly, to give you an opportunity to invest, whether it's personally or through your funds, and also possibly partner or advise or mentor a company that requires your knowledge, your execution experience, and most importantly, network and build relationships. So that's Blockhouse. Hopefully by the summer, you guys will see our physical clubhouse built, and we will be hosting our events there. So today's talk is about crypto analytics and crypto investing. Several of you, as I've already been speaking to, have had an opportunity to tell me about what you're doing in this space. Some of you were lucky enough to get in early. Show of hands, how many people actually invest in crypto? So we're looking at the whole room. How many of you started in 2012 or before 2012? We're down to one. 2013? 2? 2014? 1. 2015? 16? 17? 18? We've got one late adopter over there. Well, you know, and that's the beauty of doing a thing like this. Like, what you're seeing in the room is really that innovation curve of you always heard about the early adopters crossing the chasm into like actual adoption and getting into that peak. We're getting to that point now where you see top institutions making comments on this. You see large pension funds thinking about it. You see our grandma asking about it, right? So it's an interesting space to be in right now. And while people have said this is a similar scenario to the early stage of the internet, the difference today is that the information surrounding this market has penetrated the world, and therefore there's a lot of attention in this space, and the technology is slowly adopting. In some cases, very fast adoption is occurring. So our speakers today have been chosen because they provide two different perspectives on the crypto analytics space. And I'll let them each introduce themselves, and we're going to have a moderated discussion about crypto analytics and investing. And then we'll open it up to Q&A with you folks, and hopefully we'll leave today a little bit smarter, maybe with a few more ideas on how to make more money, and most importantly, with a few relationships in this room.
Thank you. Alex Mashinsky. I'm a serial entrepreneur, CEO of Celsius Network. Did 7 startups before that. So anyone here who did more than 7 startups? So Celsius is all about enabling credit and in the crypto community. So we enable dollar loans for the crypto holders. I'm sure you heard of a few other companies trying to do the same thing. The difference between us and them is that we actually have a multi-trillion-dollar institution that agreed to both become our custodian as well as to help us with issuing the loans. And we're in the middle of an ICO right now, pre-sale, going live March 15th.
Hi, everyone. My name is Hatzakis. I first got into Bitcoin back in 2013. I wrote about Bitcoin market inefficiencies and arbitrage, and I mined a little bit of Bitcoin that year as well. Unfortunately, not enough. But I have about 20 years experience in financial services, in working for online brokerages. So in addition to various lines of work that I do as a fintech researcher, I also run forexbrokers.com, where we publish reviews and detailed research reports about online brokerages. And from about 43 brokers that I've reviewed already, international brokerages, U.S. brokerages, over half of them offer cryptocurrency trading in one way or another, and this has literally all been within the past 12 months, this shift. So we're starting to see more, brokers offer more and more crypto assets. And yeah, I'm happy to explore this topic today of data analytics and research, and explore this with you, as this is a new field that's evolving.
So, guys, let me begin by saying it's interesting because when somebody's willing to lend against it, that means it's real, or he thinks it's real at least. What made you, or what helped you convince those that are providing you that liquidity that this is something that is a safe asset to be lending against?
Well, I wouldn't say it's a safe asset. It's obviously a risky asset, but Celsius is all about the community, so we came at it from a different angle. Basically, I believe that most of the major coins are not going to be successful long term unless we find a real application, and trading coins with each other or doing ICOs is not a real application. So we effectively, we ran out of anarchists 2012, we ran out of libertarians like 2014, and now it's 2018. We are running out of speculators. So what's the next wave of adoption, right? The next wave of adoption are people who actually need a loan or they want to earn interest. And that wave of adoption is the next. You were talking about crossing the chasm. Jeff Moore, I think my name is even in that book, because he gave one of my first companies as an example of crossing the chasm, Arbinet. And we are not crossing the chasm. We're going to fall into that chasm right now because we don't have enough new adopters. Everybody who thinks that there's going to be 100 million speculators is wrong. Okay? There's just not enough speculators around the world. We're at about 36 million active wallets right now. That's it. Okay? So there's cities in China and India that are bigger than that. Okay? So for us to really, for this industry to take hold and become a foundational asset class that everybody's investing in, we need the next 100 million users. And that's crossing the chasm. That 100 million users is crossing the chasm, and that's exactly what Celsius focused on. We believe that if you give these people the ability to borrow against their coins and you allow them to earn interest, you will have many, many people that are sitting on the sidelines right now. They may have even downloaded a wallet, but they did not deposit any coins in it. And that's the trigger that will get them across the finish line.
On the idea of these statistics you've come out with, what are the sources that both of you look at when you're looking for data in the crypto sphere? How many wallets have been executed? How many players are in the industry, etc.?
A report that I looked at that came out, I think, a few months ago from it was a Cambridge cryptocurrency report, I think out of the UK. They put a number at something like 180 exchanges at the time, and I'm not sure what the number of wallets is that was mentioned, but that number, I would take it with a grain of salt because, one person could have 1,000 wallets. So it's hard to measure users versus wallets, but now at the brokerages where you can measure actually how many people are opening accounts, you are starting to get a better gauge, like Coinbase having over 10 million clients, I think is a strong sign. So I agree with Alex that the adoption rate is needed and it's still very low right now, but I don't think that's necessarily a bad thing because if you look back in the early days of the internet between 1994 and 1995, there was literally like less than 0.5% penetration in the market. So even though we're at that early stage, it's just going to take time to get there. And of course, back in December when there was all this hype and all these speculators rushing in, the price was accelerating. There was a tremendous amount of velocity, and we can see that velocity return just if there's another wave of interest or if some big banks make announcements. But I think it will come and go, just like historically Bitcoin has gone through these waves where it's crashed multiple times already. So I think that represents a good indication of what the market will do more broadly as far as all these crypto assets as they prove their use cases. Many will no doubt fail, but I think holding a broadly diversified portfolio across different type of tokens. When I say type, I mean different sectors like infrastructure protocol, privacy tokens, It could even be something that's just a tokenized IP or asset or product that some company has, because it could be a really good product. It doesn't have to solve, the decentralization challenge for it to be a winner. I mean, maybe long term, but trying to find which token is going to really be the best, fully decentralized over the next 5-10 years. Nobody knows. It's so, it's way too early to guess. So the best way to research, to answer your question, I think, look at the project on GitHub, look at the type of comments that are being made about the project, and then from GitHub, go to the website, the official site of the project, look at its organizational structure. Is it structured as, a Swiss foundation? Is it structured as a co-op? There's legal challenges that come about, like with the Tezos project, where you have these lawsuits. So just like if you were a venture capitalist or private equity investor, the same kind of due diligence and mentality you kind of have to have as a crypto investor. And, retail investors and traders, your average investor isn't used to that. So the VCs can afford to have a bunch of tokens that they know is going to end up worthless. But in your portfolio, you probably want to make sure that some of your tokens don't end up worthless. So it's going to be hard to do that. You might have to actively rebalance, or maybe size your positions properly. The major base currencies, like Alex was saying, you'll probably see them being loaned against more often. Because in like in Forex, those are the major cryptos. So in foreign exchange, you have major currencies, and then you have cross pairs and more exotic pairs. So right now we have a lot of exotic, tokens. But there could be diamonds in the rough there. So I think diversification is key, and it depends, of course, on the size of your portfolio. If you only have 5 or 6 tokens and half of them are ICOs, that's going to be a lot more aggressive than if you have 5 or 6 tokens and they're, the top most liquid tokens. Or if you have 50 tokens and, only 5 of them are ICOs and all the rest are kind of established tokens. So that's my 2 cents.
When you guys decide what sort of portfolios to lend against, what are the criteria, and how do you vet new tokens or currencies into that criteria?
So we have a risk model that basically we only include the top 20. Currently it's based on market cap, but we do have to exclude some exceptions, like Ripple, for example, is not included because we don't consider that to be a real coin. So we have so even though the community gives us their token or coins and we stake them to get the dollar loans, we make you can call them arbitrary rules, but they're really rules based on, is this in the best interest of the community? So when we pick the top 20, most of them are going to be based on market cap, but some of them are either excluded or included for a variety of reasons. Like if somebody's doing a project and it's really an important value creation for the community, it might be number 50, but it may be included in the top 20. So if you contribute to Bitcoin, we may lend you 40% against that, but if you contribute whatever, Doge or Tezos is a good example, right? We may only lend you 20% against the Tezos, right? So for us, it's not so much the risk of default as it is what is the risk to the community, right? Because we're lending capital that belongs to the community. It's not our capital, right? So if there's a margin call or liquidation event or anything like that, we need to make sure that we can return that capital to the community.
Now, when we both think about analytics on either side of the spectrum, what are some of the tools out there right now that can support an investor's ability to think about how to go from all the lists, all the coins on CoinMarketCap to 5 or 10 where they'll see opportunities. In addition to doing the fundamental research of what's being said on GitHub and what's maybe even being said on Twitter or Medium, what are some of the things that you guys have identified as ways to kind of do some gut checks?
I would say that, if you compare it to other financial markets where you normally have, standardized reporting, like for foreign exchange, you have economic data that comes out from, the Treasury. You have, data you could rely upon. And, securities, you have reporting standards by listed companies. Depending on the venue you're listed, the reporting standards might not be as, strict. In crypto, there is no basically reporting standards for teams, but there are best practices that are starting to emerge. So I would say to start to align your research with some of the best practices that are coming out there, like look at where the coin is listed, because some exchanges won't even allow a coin to be listed if it doesn't meet certain criteria. So you could kind of reverse engineer the research process that way. But then there's also technical analysis. It doesn't tell you a lot about a team, as far as the qualitative aspects of the project. But a lot of crypto investors, I would say, unfortunately, are just concerned with price. So they're drawing their trend lines, and they're asking when Moon and when Lambo. But I think it's good we're seeing a shift kind of away from that, and people, realizing that it's not just about price, but you actually have to have some underlying value. So, the industry is starting to self-regulate and scrutinize projects more and kind of dig deeper into how their white paper originated, what's the crux of their idea, did they take some elements from other projects? But it really depends, because just because somebody copied some other repositories and stole a few ideas from others, again, this is open source technology. You're supposed to be able to do that. So as long as it's not a phishing clone coin, where someone's trying to make you think you're buying a coin when you're buying some other coin, I think forks are healthy. And if you could go fork Bitcoin or Ethereum or anything else and come up with a good project, as long as you're transparent about it and you tell everybody, yeah, we copied this and we copied that, because otherwise they're going to find that out and they're going to use that against you. So it's all about transparency and putting things in the right context. There's many abstractions in this space. Highly abstract concepts, abstractions about abstractions. So it's so easy to take something in a different context depending on how it's discussed.
So I think it was Picasso that said the best artists don't copy, they steal. So I mean, it's rampant, right? I had a meeting with an investor just a few days ago, and he asks me really these tough questions, and he says, "What are you going to do about Fahrenheit?" And I'm like, "What's Fahrenheit?" He says, "Your Celsius. Didn't you hear there's a Fahrenheit?" And I really felt for it, but that was just a joke of kind of saying that everybody's copying everybody, to the word. So the community, in my view, does not need 10 copies of the same thing. It's like just another mosquito sucking blood out of you, you being with the community, right? Us funding all these projects takes away from us winning, because the battle is crypto against all the other base currencies. That is the battle, right? Are assets going to stay in dollars and yens and in euros, or are they going to actually move into cryptos? And the more we dilute our efforts and create thousands and thousands of variants and forks and blockchains that are 5% faster, or whatever, that's not going to contribute to the community. So in my view, we haven't had the Netscape moment yet. Some of us are old enough to remember Netscape, right? When the browser came out, it was obvious that we all had to make a left turn, and everything is going to be based on the browser. It was an obvious moment that was the transformation moment for the internet, right? 1995. We haven't had that moment yet in crypto. We haven't seen something that made it really obvious for all of us that we need to turn left and follow that. So what we have is like a Cambrian explosion of experimentation, where thousands and thousands of experiments are being made, and people are throwing because they don't know what's going to win, what's going to lose. They're throwing, it's a spray and pray mentality, right? We're just going to spray everything we can, and the one that's going to win is going to pay off for all of our mistakes. And that is great maybe in nature, but it's not so great in crypto, because our entire existence is at stake, right? And if we don't do the right stuff, we're going to be decimated. Believe me, the banks and the financial institutions are sitting there every day and thinking, how can we shut this down? Oh, great. Let's disable the credit cards from being used for buying crypto. That's going to slow them down, right? So every day, everything you see is about chopping an arm or a leg or a toe or a head, so and the community is not getting together to fight that off. The opposite. We are fragmenting ourselves instead of collecting our efforts and pointing them in the right direction.
Well, on that note, that's one of our mandates, is to congregate the community and create a unified voice so that we can actually break down some of these walls and some of these stereotypes. Even when you look at the foundations developed behind the protocols, they have very specific agendas, right? It's to make Ethereum the best, or to make EOS or the best, right? Like, but as you're saying, there needs to be a little bit of a unified approach as well, because the industry is very large, but we want to make sure that it's here to stay.
I want to counter what you're saying in a healthy way, and look at the same thing from the other side. And I think that you're right about many points where we don't need a million of the same application. Totally agree. On the other side, kind of the paradox to that is that this is like a new operating system or infrastructure where people are just going to continue to build things on. And as long as they could differentiate and bring something new in their copy, then I think what's happening is happening organically in a way where, yeah, there are a lot of clones, there are a lot of copycats, but for those that are putting real effort to make it different, like Cardano, or I'm not trying to say I support that project, but how you have Neo and Cardano and Ethereum all kind of competing in that sector of the industry, I think it's kind of healthy, even though each one is different. I think it's good that you have them competing sort of against each other. And so I guess it's good and bad. As you pointed out, it's bad because it kind of dilutes our focus and it confuses people, or it fragments the industry. But on the other hand, I guess it's inevitable for this space to evolve, that you have more and more projects come out, and a lot of them will fail. So it's unfortunate to the investors, because that means a lot of people will lose money. And that goes back to my point about diversifying. And it's incredibly difficult to diversify in this space, because even if you just look at the top 40 coins by market cap, again, market cap is just one indication, and it can be misleading, especially if a coin just crept up into the rankings artificially within the past few months. And when I say artificially, I mean holding your place in the top 20 over the course of 2 years is a lot different than just getting into the rankings, for a week or two, or even for a few months. So having said that, I do think staking coins and using your crypto in a lending manner is going to be commonplace in the future. So I'm glad to see projects like that come out, where you're going to have non-bank lenders, lend against these assets, because people want to use their crypto, but they might not want to sell it. So I think, I'm advising a project in full disclosure called Digits that lets you swipe your card and turn any, card into a crypto card without any new card needing to be issued. So I think we're going to solve a lot of the challenges in the space with new technology. And although regulators have the ability to squeeze and slow the pace of acceleration, I think the acceleration is coming and it's inevitable. So, regulators could only slow it down. But I think this technology is unstoppable, so I'm not as concerned. But I do hope that the community can get focused more, so that they don't waste time with bad projects, or so it's not fragmented.
I think both of you kind of agree. The goal should be to foster innovation and support innovation, but at the same time provide some sort of a unified front for the cause as a broad opportunity, so that regulators and incumbents don't shut it down, right? So it needs to be a 1-2 punch type opportunity, where we create avenues for individuality and exploration, but at the same time we have enough room to play in the arena and don't lose our space as an industry. So one of the interesting things you mentioned was this adoption. You mentioned Netscape, right, as an indication when we saw the internet really hit mainstream. What are you? What do you both think is the potential innovation or product or service that's missing, or that if it was created, it would really support us having that Netscape moment? What do you think some of those items are?
Well, so I think again taking a syringe and injecting the blockchain into JP Morgan is definitely going to generate several $1 billion of additional profits for JP Morgan. But that's not Satoshi, and that's not why we're all in the room, right? So is the technology going to work? Of course the technology is going to work, right? But this is all about empowering and enabling decentralization. And, let's call a spade a spade. I think somebody over there agrees with me. Ripple was enabling the banks, right? All the old timers said, hey, this is a fake project. We're not going to support this. And then the speculator said, no, we can make 10,000% on this thing. We're just going to run it up. We don't care what it's for, right? So that's my example of the community not doing the right thing because we betrayed ourselves. This is not about somebody from the outside coming in and injecting something like a foreigner or some alien into our community and us not noticing. A shapeshifter, for those of you who are sci-fi guys. But so my point is that, again, I think the killer app is credit, and the reason I think so is that half of all the credit on the planet is concentrated in the United States. That is the source of our power, source of our GDP, the source of our growth, and most people don't understand that. Most people think it's our military or it's our U.S. dollar being the global reserve currency. All those things are the derivatives of the credit system that we have. The fact that anyone from the planet can come, land in the United States with a great idea, and get credit either in the form of venture capital or in the form of debt or in the form of 10 other products that we throw at everybody. And the success guys can create tremendous amount of value that they cannot do anywhere else on the planet. And that is the promise of decentralization and the promise of crypto as the driver of that, right? I mean, in my view, not to go on a long speech, but in my view, Ethereum did not invent, the main thing they invented is not the smart contract. Everybody thinks it's a smart contract. It was actually the ICO itself, right? If you think about what they created the currency that funded 3,000 ICOs since their first ICO, right? So they invented a whole new system of funding things that was supposed to be focused on decentralized growth, fund this whole movement, right? So we were given this precious innovation. The what do you call it? The smart contract was just a sprinkle on top. When you get your dessert and they put a little bit of gold on top, that's what the smart contract was. Anyone here is using a smart contract for day-to-day applications? Anyone in the room? Seriously? So, sorry? Yes, yes. Oh, you're the one who bought it. No, but the point is that the innovation was the ICO, and the innovation was enabling the decentralization to kind of take hold and expand, right? So if we put credit on top of that, then we really have an opportunity to take all the toll collectors on the left side, all the banks, the insurance company, all these guys, Google, all the guys that perfected the mechanism of extracting value by being a toll collector and replace them with decentralized solutions. Because no toll collector can compete against a decentralized execution. Well, there's only one, Uber. Since they lose money on every transaction, even a decentralized company cannot beat them. But my point is that, we as a community, and I'm emphasizing this again and again because I think if all of us are the activists, we are the foot soldiers, and, we're not doing anything about it, okay? And we have to do it with our wallets, we have to do it with our mouth, we have to do it with our actions.
So on that note,
not to be controversial or anything.
Well, no, it's important to challenge the ecosystem because I think that's the only way the ecosystem will adapt and grow in a healthy manner. When we think about crypto analytics and the types of currencies or tokens that we want to be participating in, if you talk to a lot of large institutional investors or those that have raised funds to invest in the space, many of them talk about being solely focused on protocols. And as we know, if we look at all the ICOs that have been raised in the past year, not the majority are protocols. So when you look at the non-protocol companies, what are some of the fundamentals that make you think, okay, this is worth it, though it's not a protocol?
This is a very important question, and it kind of segues from what Alex just said. And I just want to add to that before I answer this question that, I'm totally passionate about public, decentralized networks that are going to empower people, and this technology is definitely going to level the playing field, between those big rent seekers that you mentioned, and the public networks where anybody could gain access and they're not permissioned, and you claim your access with math. So having said that, I think at the same time there can be a place for centralized systems using blockchain. And even though central bank currencies, for example, like a Fed coin, would be nothing more than just the dollars we have in our pocket, just with some cryptocurrency sprinkled on top, I think that could have a use for the government, in many ways. And then for companies like Ripple, who some of my colleagues were early market makers and helped develop their liquidity over the past few years, I think they're the use case that has proven that you can still reach that type of evaluation, which is very significant, right next to the top, other five currencies, even with a centralized system. Because although there are risks and you are relying on the people running the Ripple network, that they're going to continue to run it, and their project is not decentralized or at least not as decentralized as a Bitcoin or Ethereum, I think, if enough banks start using the Ripple network, then that kind of indirectly gives it value. So even though banks don't even have to transact Ripple, like I could send US dollars over the Ripple network, US dollar Bitstamp I could send you, and that's only redeemable at Bitstamp. But that still reinforces Ripple's value if banks start to use it, and if there's a shift away from Swift and the other competitors. So I think Ripple has proven a use case, even though it's not decentralized, it could still be of value. And to answer your question, which is how I thought to segue, there are a lot of companies that are launching tokens where they're not trying to be a protocol and become fully decentralized. You are relying on their team to continue to support the project. Just like Ethereum, at the end of the day, you're relying on, the EIP editors and the core engineers. So, fully decentralized networks are coming down the road. Like Bitcoin is the best example because it's the most mature. It's been around the longest. It's been attacked from every angle as many times as you can imagine. So that has helped it get stronger and become more decentralized. I hope that happens also for a lot of these other public networks that are, hoping to become decentralized, because otherwise they won't be fully decentralized. So I'm really passionate about those public blockchains, and I think they may need a while to get there. So we have to give those time. But in the meantime, there's a lot of projects that, a company could have IP and they want to tokenize it. And, if it's a viable use case, even if it's not solving the decentralization theme, there could still be, money to be made in their project or money to be lost. So I think that's something to keep in mind when investing. Don't just shun an idea because, it's not fully decentralized, and realize that blockchain can be used in many other ways. Even though I'm most passionate about the public decentralized ones, and I think those have the biggest potential for socioeconomic impact and to give back value to the people in the world, and even the unbanked and financial inclusion. But I think in the meantime, the big megaliths and the big companies, or even the small mom and pops that want to get into this space, will be able to benefit in one way or another.
Any company is worth $90 billion. It's not an experiment. Okay, an experiment is when a company is worth $100 million, $200 million. I'll give it $500 million. When the market cap of a company reaches tens of billions of dollars and the founder is worth more than Zuckerberg for a minute, it took Zuckerberg 15 years and 1.5 billion people to reach that valuation, right? I think you all would agree with me that Ripple is not that mature or creating that value. If all the banks in the world used Ripple exclusively, and all the other services, right, Swift and all the other IBAN, all the other services would go out of business overnight, Ripple would not justify a $2 billion valuation as a public company, right? Because we know how much value, we know, I think if I'm not mistaken, Swift is like 490 million in revenues in total, okay, something like that. And I have nothing against Ripple, and I have nothing against people creating solutions for centralized blockchain. I'm not saying that that's a bad thing. That wasn't my point. I'm just saying that as a community, at least the community I'm part of, almost everybody is focused on the other part of the equation. And in that part of the equation, if we have shapeshifters in there who are sucking a lot of that capital out for one reason or another, that is hurting the rest of the community in its ability to execute on the projects that really matter. And that's what I'm concerned about because it's hurting the community.
So just as a follow-up, what are some of the companies out there that you think are solving a problem that might not be a protocol layer, but an application using the blockchain?
Again, I'm very opinionated, as some of you might have noticed. I think the public blockchain is all about financial solutions. I don't believe that, again, 90% of these other applications are going to survive, just like 90% of these companies during the internet bubble didn't survive. And crypto / blockchain, which implements consensus, open ledger, and a fully transparent public blockchain, will have to be financial applications. Why? Because these systems are very slow and very inefficient. So only the most viable applications can survive, right? Today, anything lives because it doesn't have to generate revenues or prove that it's viable or scale, right? So what we're heading towards are much higher bars of viability checks where teams and applications have to cross. To cut it short, I believe in insurance, I believe in lending, I believe in financial products that are easily can adapt everything that we just talked about and transform a toll collector into a membership organization. Think of Costco, but a global Costco versus a local Costco, right? That kind of takes the best of breed and puts them in an environment that does it for the community. And that's the promise. The execution is far from it. I mean, most of the companies that are doing things in these areas are all focused on profit. They're all focused on maximizing profit. And how much revenues did Ether generate since it was created? Anyone has an idea? How much did zero? How much revenues did Bitcoin generate since it was created? Zero, right? So, and these are the best examples, right? So when most entrepreneurs come, I get pitched 100 times every day to be an advisor or to be a founder or to invest in projects, right? And I say no 100 times every day because I just ask these people very simple questions about token economics and about why are you doing what you're doing, and they fail every time because they approach these things for the wrong reasons. So the beauty of what Ethereum invented, what Vitalik invented without even knowing that he invented it, right? Him and Amir Shetrit, right? Sitting in a room, scratching their head, trying to figure out how they're going to finance a project that the Bitcoin Foundation said no to. Because that's what happened. They came to the Bitcoin Foundation, they wanted to contribute their smart contract, and the Bitcoin Foundation said, we don't need this shit. We're doing great without you. So they went, they sat in a room, and they had a great lawyer that helped them put the contract together, and they created this new innovation. The beauty of that innovation, the ICO, is that the value creation is completely external to the mechanism itself. The value creation, the token or the coin, is completely external to what's happening in the network. And it measures, it's a barometer that measures the value of the community. So if you think about Ethereum, the Ether, the value of the Ether, today 917, where is it right now? Right? Huh? 840. I've been traveling too long, so I'm still in 2 weeks ago. But whatever it is, 840 today, 840 is the consensus by which the community agrees of what's the value of the community at this moment. That's all it is. Anyone disagrees? Anyone has a different explanation for the pricing of Ethereum every day?
Speculation.
Yes, but what is it? What are the people speculating? They're speculating on what is the value of the community. I agree with you, that's speculation. It's 90% speculators who are speculating every day if the value of the community is going to go up or if the value of the community is going to go down. So
I think you're saying that the market is perfectly efficient and balanced.
In crypto, it is. It trades 24/7. Everybody has all the information. It's more transparent than most stocks or most bonds, in my view. So anyway, the point is that this external barometer allows us to run businesses that are not for profit, and yet everybody benefits. And that's what we're not taking advantage of.
Thank you. On the note of transparency and efficiency of the market, we see, the mainstream media is
They think it's a currency.
the mainstream media is covering it when it's interesting, and otherwise they're pretty silent, right? And that's when I call interesting, it's either when it's shooting up or shooting down, because right. Sometimes it's interesting, sometimes it's a failure, and they're always wanting to play both bookends because that makes for good news. What about the emerging media that covers crypto? What are your thoughts on some of the publications that you do go to read, and some that you think are entirely paid content or don't trust? Like, where would you say is the Economist of Bitcoin and crypto, and where would you say is the National Enquirer?
I think it's a challenging topic. Firstly, with valuations, there are many different variables that contribute towards valuations. And on the surface, we might say, oh, yeah, some are speculators, some are hodlers. But there's a lot of deeper themes. And to know what everybody's motives are, I think it's a very healthy array of motivations behind why people get involved, and their time frames also vary. Someone might be getting involved for just 2 months. They could be having a really big trade. They might be day trading. So I think the market is getting more efficient, but it's definitely still very inefficient and like a nascent market. And these inefficiencies might stay for a while just because of the limited supply. So to answer the news question, which I think is relevant because people are looking at prices in the media to understand what's happening, and the media normally covers all their stories in relation to price. And you see the knee-jerk reactions. Oh, Bitcoin crashed today 50% or 30%, whatever. I think it's important to realize the type of content by looking at its structure and its complexity. So most even top-tier news agencies might just report on the surface about something, but often they haven't really researched the deeper layers of complexity going on in the industry. So often those deeper layers of complexity are very technical. So, it might turn off your average, mom and pop investor who's not so into crypto and not so advanced. So I think there's a disconnect, but we're starting to see that kind of branch both sides where, the content is becoming more intelligent. Wall Street Journal have some dedicated crypto folks who have written books, as well as, Forbes, and, there's a number of major publications that have dedicated crypto teams. And I think, publications like that is where I would kind of read up on what's happening in the industry sometimes. But to really dive deeper, Medium is a great, publication, I guess you would call them, kind of an aggregator of publications. I like aggregation tools. Feedly, I like to aggregate a lot of content from various sources on Feedly and just look across the headlines. I used to be a journalist, so I published over 1,000 articles. So that's what journalists usually do. They usually look at all the headlines that's happening in the world, and they write news about news. So when you get to the source of the news, that's where you could start to understand what's happening. And sometimes they create the story themselves by interviewing the founders or by getting the information, firsthand from where it's originating from. But often, they might be following a developing story, but by the time they go to print, if they wait too long, it's old news. By the time they come out with their research report, all the statistics are kind of outdated because this industry moves so fast. So that's required. That requires a lot of news nowadays to become like snippet, and I think that's why Twitter is useful. So back to analytics, I think I know some pretty big companies that use the whole entire Twitter, hose the whole entire feed, which costs a lot of money to access, and build analytics on keywords and use sophisticated machine learning, because one significant crypto personality could post something about some other crypto or about their own crypto, and it could have an immediate impact on the market. So that's kind of like the fundamental news coming from a a stock reporting company that would either have to make some filing normally in a press release. They can't just make the announcement on TV. They would have to go through the proper regulatory channel. But in crypto, someone could just announce it on Twitter, and that's kind of like the equivalent of something you would find in an Edgar SEC filing report. So it's challenging to get the crypto analytics, and I don't think that's going to be standardized anytime soon, because a lot of these crypto projects are public blockchains. They're already mature. They're beyond the reach of the regulators, in the sense of, nobody can regulate Bitcoin itself or Ethereum. They could only regulate the fence around it, as far as the fiat access points and the fiat off-ramps, which is a different topic. And I also just wanted to add that I'm personally passionate about the identity protocols that are coming out. I think those are going to be important for us, as well as the privacy protocols, which I know there's a lot of concern. Some of these privacy coins could be used for good or bad. But, like it or not, this technology is coming, and it's going to change how we interact in the world. And, even JP Morgan, they've invested in that technology, which is a kind of a fork of the Zcash protocol. And, MIT just said like a week ago in their report of the top 10 technologies that's going to change the world in 2018, and Zcash was one of them. So I think, all these things are converging. And I think that's going to help propel the public networks. But I'm sorry, I know I went off into a tangent, but I just wanted to add about the the identity tokens, the privacy tokens. And I think those are really kind of going to be the core ones. All the rest, I think it's too early to really tell. Store of value, medium of exchange, I think there's going to be a lot of competing ones there. But smart contracts is definitely important. And for insurance, as you mentioned earlier, Alex, in markets where there was no credit facility, where you couldn't borrow money, the economies there failed. So in many parts of the world, there's been economic growth and prosperity because you could borrow money. But in the U.S., we've had all these problems with derivatives, collapsing the market in the financial crisis because of systemic risk. So blockchain could potentially eliminate that by using smart contracts where loans are fully collateralized. And I think that's an important part of, the use of smart contracts and non-bank lending.
I want to open up the dialogue with everybody sitting in the room. I know that each of you have probably some burning questions. And again, this is a forum. It's not just a panel. So each of you also have some interesting probably thoughts and insights on this space. So feel free to pose a question, and if you want to also pipe in and provide your thoughts, let me know. So let's start with the questions first. Does anyone have a question?
Yeah, so I agree with you. I think I don't know any project today that can declare that they are 100% decentralized, right? So for a variety of reasons, and I don't think that is the test. I don't think we need to have a barrier that says, oh, the wall is this high and only fully decentralized applications should pass, right? I mean, yes, it's a transition from fully centralized to fully decentralized, and we're not even halfway through it, right? So some things like AI and ML are definitely working much better when they're centralized and they're using supercomputers in centralized locations, and that is a great way of solving those problems, right? But the implementation of the solution, which is the algorithm or the risk management model or whatever else you're applying, is a decentralized implementation. So I believe that you can bridge those two worlds correctly if you asking the right question and if you're getting the right answer, right? If you're trying to build a centralized risk model, then you're going to get a different answer than if you're trying to build a decentralized risk model.
The question is, what is the underlying value of the community when you compare it to a currency where it's actually the underlying value of the economy? How can we kind of compare the community to such that value?
I would say firstly that for looking at the established, crypto assets like Ethereum, firstly, you should look at how secure the network is in terms of how many nodes there are, how many miners are mining. I think for established cryptos like Ethereum or Bitcoin, you're firstly getting a large part of the valuation is the security behind their networks. So it's the years of people mining and the competition between all those miners, and the amplification of their mining and the difficulty getting harder. So that race, that arms race, helps secure the whole network. And I think that's a big chunk of the valuation. The team is important, obviously, in a project like Ethereum and even Bitcoin, which has a core of distributed developers around the world that are working on enhancing the project. I think you are getting some indirect exposure to them as well. Because if they all of a sudden tomorrow abandon the project, that would, I imagine, cause the price to fall. Especially if they publicly announced, oh, we're deciding to switch to Bitcoin Cash, or like some of them have. So again, I think it's happening in a natural way, but that's definitely a good question to ask. And my take would be, the team is a part of it, but for the ones that are mature, like Ethereum, you are getting the security of all these miners that have a vested interest in securing the network and keeping it safe against, attacks like a 51% attack.
You asked about the value of the euro, for example, right? The ECB, the European Central Bank, has a lot to do with it, right? Because they effectively are the floor to that currency. So yes, it's determined by the earnings, the GDP and DCF and all these other terms, but effectively everybody knows that if there's going to be a falling knife, the ECB is going to come and catch it, and we know that about the Fed, and we know that about the Japanese bank, and so on. So our calculations for fiat currencies and how those are valued are very, very different than what they are towards crypto, because crypto does not have anything like that, right? And in crypto, if there is a falling knife, if there's a collapse, the market basically, it's all about the market. It's all about open demand and supply balancing, where at some point the number of buyers exceeded the number of sellers, and at that point you have a reversal, and all of the herd comes down and comes running back and tries to buy their coins at a price that is still lower than what they sold them for, right? So that happens every few months, right? That volatility has nothing to do with the value of the community, right? Those are the exceptions, in my view, to the value of the community. If you normalize the value over a period of time, you're going to get to some median to, if it's whatever, the 200-day average or whatever you want to use. And to me, that is a much better indicator of each coin and each community. And so, for example, when Tezos went through, their problems, a lot of people left the project. A lot of people who were developing on the project left the platform. And obviously, the value of the platform went down. You can give 10 other explanations of why it went down, but effectively, the value of that community has to do with how much cash they have in the bank, which is now about $1 billion, plus whatever the value of that community is, right? So Ethereum specifically has the most thriving community in crypto. It has the most advanced community in crypto, and it has the most promise in crypto. We are ERC20 based. Why? Because it's the safest bet today is to issue a token on an ERC20 platform, right? So that's how I view
So we'll take two more questions, but before we do that, I just want to introduce our lovely host tonight. This is Andrea. It's interesting, and this is where the world becomes very cool. I was dining here, and it turned out that the owner of the restaurant was a very successful software entrepreneur who is building a product for the blockchain. And so hence there was a beautiful synergy here. I just want you to say a few words. And their restaurant is amazing. I think some of you had an opportunity to check out the appetizers. Everything on the menu is superb. So if you are hungry afterwards, please help yourself to some dinner.
Thank you for coming, and I appreciated hearing some of the comments here. I'm Greek, and the restaurant is Greek Steakhouse. I'm also, as Leland said, a software entrepreneur. When you asked the question before, who had 7 or more startups, I've had 7 or more startups. I go back. Yes, thank you. I go back to 1969. I was programming the first time coming out of Columbia University on machine code, zeros and ones. And then I started with Wine Labs and Tech, and I've been through all of it. I think this is an exciting space. I own 4 software companies. One is an email, an IM company, an intelligence company. I agree about many of the things that you guys said, that the fundamentals have to be on delivering value as well as building the community. But having been through, like many of you, through the dot-com collapse and the fact that many hyped companies and speculative companies disappeared, but the underlying technology of the internet was there, stayed, and built stronger, I think the same thing is happening here. So I'm both an investor as well as an entrepreneur and a founder of companies in the blockchain space. And I think that the trick, as Al said, was to find use cases that make sense. And I'm very excited that you guys are all here. And we have a community in our restaurant, so be part of the community. We thought about offering, in addition to American Express, taking Bitcoin, but it was too complicated. So even though we thought that a lot of men would be very happy to bring their girlfriends and show off by paying with Bitcoin. Thank you.
And women.
Yeah, very good question. You probably can come and give the answer too.
I have my assumptions.
Yes.
But I'm keen to hear yours.
So first we only lend to crypto holders. So we don't care about anyone who just needs a loan, right? So second, you have to own crypto to apply for a loan. So now anyone who wants a loan has to join the crypto community, right? Third, you have to deposit the crypto you have as your collateral to apply for a loan. So let's say you bought Litecoin because you really believe in that project, even though the founder sold all of his coins, and you want to deposit those coins in our wallet. We accept Litecoin, and we will give you probably 30% against your Litecoin holding, right? So now you could still benefit from the upside of the coin, and you can access 30 cents on the dollar at any time you need. If you want to come to the restaurant and have beautiful Greek food, in the future, hopefully you'll be able to use it, right? So that dollar loan could be put into your bank account or could be put into a debit card or any other application that supports the mechanism that we have. So how the community benefits. So now we are charging you as the borrower 9%, and we're paying 5% of that 9% to all the other people who stake their coins to allow us to get the dollars that we lend out. So it's not peer-to-peer. So peer-to-peer is if me and you got into a transaction and everybody else is not included. Here, everybody is included because everybody's BTC is in a pool against which we borrow dollars. Everybody ETH is in the pool against which we borrow dollars. So when we distribute it, our smart contract looks at who participated, who allowed us to issue that 9% loan, and it allocates that distribution based on who participated. We take into account three elements. One is how long you've been with us. The longer you've been with us, the more you supported the project, the more we will give you out of that distribution. Second is how many coins do you have? Not our coins, the other coins. If you have a lot of them, that means you're contributing more than others, so we will give you more than others. And the third one is how many cell tokens you have. How many of our tokens do you have? Are you just getting those tokens and you're selling them, or are you holding them? If you're a hodler, then you're doing good for the community. If you're doing good for the community, you're going to get rewarded. If you're creating volatility by moving your coins and doing all kind of other stuff, you get penalized. We move you to the back of the line. You're going to get less than the other people who are not creating volatility. So if you look at everything I told you until now, it's the opposite of what exchanges do. Exchanges love volatility. They make money every time you move your coins. They make nothing when you don't trade, right? We do everything to prevent you from trading. Why? Because we're doing it for the community. So everything in our wallet, every rule we have in our wallet is all about the community. Is it good? The question is it good for the community? And if it's not, then why is it in the wallet?
And is it good for the community if I get a loan against my cryptos?
Of course it's good.
And I buy more cryptos with money I don't really
I do
have.
not, I don't think that anyone should be issuing margin lending.
It sounds like that.
No, but when you have a Charles Schwab account and they allow you to buy 2 Apple stock for the price of 1, and basically they allow you to go on margin, that is bad, All right? That's not what we do. We don't allow you to buy two Bitcoin. We don't sell Bitcoin. You cannot buy Bitcoin or Ether in our wallet. The only thing you can do is deposit and then get $1 deposited into your bank account. You can, but why do all of that? You can just go to Binance and get the 2-for-1 or 3-2-for-1 leverage. So we are not attracting people who want to do what you're saying, right? We are the opposite. We're going to make it very hard for you to do what you're saying, because that's not the point. The point is that the next 100 million people can't afford to just buy 5 Bitcoins or 5 Ethers or 5 Litecoins. They just can't afford it. So if you want them to be included in the community, you have to solve their problem, not our problem, okay? Most of those people are dreaming about owning one Litecoin. You have to solve their problem. So we're not focused on the 36 million wallets that are trading every day. We're focused on the next 100 million people that have not yet bought a single coin.
But you will not give them a loan because they don't own crypto.
If they want a 9% loan, which they cannot get in almost any country on the planet, they have to buy crypto. That's the only way to enter into our community. Right? So the only way, for example, for Litecoin, against which we give about 30%, Litecoin has to drop 70%. So let's say that day happened, okay, and Litecoin drops 60%. You'll get a notice that says to you, hey, it's a very volatile market. You have 3 options. Before there's a margin call, do you want to deposit more coins? Do you want to pay down your dollar loan? Just transfer money back in. You're no longer in a margin position, right? And the third one, do you want to sell coins now before we have to sell them for you? Just like, again, Charles Schwab does when Apple goes down or when anything goes down, and you have 3-to-1 leverage, and they have a margin call, right? So we cannot reinvent the rules of margin, but what we can do is try to protect you and protect the community at the same time, right? And again, all this is done to help you with your business, to help you buy your car, to help you with the things that, while you're still getting all the appreciation on crypto, right? So it's a win-win for the community, and that's why it's a single-digit loan, right? Salt, our competitor, charges 16% for exactly the same service. Why? Because they're trying to maximize the profit. We're trying to include as many members as possible.
So final question of the night. Before we get to that final question, I just want to also announce, in addition to having some lovely dinner tonight, please join us tomorrow. We are hosting a cocktails with Galaxy Digital, which is one of the largest funds in the space, and it'll be up at PhD rooftop at the Dream Hotel in Meatpacking. We have a few spots left for that. It's going to be a great evening, rain or shine or snowstorm. But definitely weather the storm and come out. It'll be a great network. Last question. Who's the lucky guy? There we go.
You know what the joke about restaurants is, how do you become a restaurant millionaire? You start as a billionaire, You started as a software guy. You started as a software guy. I'll use that next time. So I was recently offered to buy options or shares in Ripple from an employee of Ripple, right, who basically is fully vested and he wants to go to the secondary market. And we were talking about that a little bit before, about that secondary market. That valuation today is less than $2 billion. So you can actually buy from people that are trying to sell these things for less than $2 billion. And again, you can argue that that's a reasonable valuation. It's equity and so on, so on, so on. So buying a token that's supposed to represent something, again, the technology, from what I understand, the technology that's selling the banks is not what the coin represents. Those are 2 completely separate things. The revenue streams are 2 completely separate things. So I don't see, if you talk about transparency and doing everything for the community, it's almost the opposite of that. Okay, so I'm not saying it's a bad project. I think they could be extremely successful. Blockchain implementation of interbanking settlement is definitely a great project. That is a great use case, right? You can build that in an afternoon. It could run better on my phone, wherever my iPhone is. My 8-core iPhone will process those transactions 100 times faster than any blockchain that anyone can build anywhere on the planet, right? So the question is, why do you need that, right? I mean, what's the use case, right? The World Bank has been issuing tokens, right, SDRs, for 50 years. Okay, that's the interbank settlement system for 50 years, right? Most of us don't know that, but so none of these concepts are new concepts, right? The issue is, where is the value? Is the value in transparency? Is the value in liquidity? Is the value in all kind of other stuff? So it's not in fees reduction, okay? It's not like SWIFT is charging so much money that, I mean, there's security issues, there's other issues, but that SWIFT obviously haven't solved. They have a bunch of problems, but I don't see the blockchain solving all those other issues. So I just don't see that as a killer app or the killer case or something that's gonna evolve all of us to the next. It's not, definitely not the Netscape moment.
All right, we'll do one last question because he's burning to ask. Go ahead. So how do you get that unbanked population that many believe that crypto can solve for? How do you get them on board when the industry is now moving to KYC and AML?
So we actually partnered with the largest payment processor in Africa. Hasn't been announced publicly yet, but they have over 250,000 locations in Africa. You'll be able to, as of May or June, you'll be able to walk in Kenya, for example, walk into any of their locations, including a guy that sits under a tree in the corner of two streets. You know, they have these guys with their cell phone doing all the money exchange, and basically pay with M-Pesa or pay with a local currency or with a credit card or with a dollar. You will see the coins in your wallet, or you can basically extract coins from your wallet and get any of those local currencies, right? So you don't need sub $3,000. You don't need KYC ML, right? I mean, that's more or less. It's not a written rule, but most banks will tell you that, you know, we don't really need that, right? That what you need to do KYC ML are on you know, Trump's lawyer paying one of his girls 120,000. What was it, 120 or 130? Sorry for the discount, right? That requires KYC ML, you know. So we are all about inclusion. We're all about solving these problems, and in most cases, the governments and the regulators are for it too. Most governments, most places I went to around the world, where I met the regulators, I'm yet to meet a regulator who tells me, this crypto thing is horrible, we want to shut it down, we're going to arrest you, or whatever. The opposite. They're saying, how can we help our healthcare system? How can we help our banking system? How can we help our insurance system? You know, how do we compete with America? How do we make our system the center of the world, just like you guys did in America? That's what they're thinking. The day China shut down their crypto world, Japan issued 12 new licenses for exchanges. Look it up, right? So this is Japan, not some little country. It's not Singapore or the Cayman Island. Okay, Japan, like this, 12 new licenses. So these people are not stupid. They see the opportunity. And that's why you're also seeing, you know, I actually have to give credit to the SEC for taking action, because the SEC is saying, hey, you guys are not going to take action. I'm going to do it for you. You don't want to self-regulate? We're going to jump in and save you guys before you ruin your own party.
So on that note, the party side of that, let's break for networking. Please, if you enjoyed tonight's talk, tell your friends about it. We want to keep these series going every Tuesday. We don't believe that a conference should be just 2 days and a closed room. We want it to be every day, because the learning and the development is happening every day. And so if you have people that you want to hear from, or views you want to share, let us know. And if you have places we can host them, like our lovely host did today, please let us know, because until we open our clubhouse, which is slated for the summer, we'll need places to do this. With that, I want to thank you once again to Andre. And if you do want to join us for dinner, I think they also have a happy hour going on right now. So have some drinks and get to know each other. We've got people from industry here. We've got investors here. We've got technologists and innovators here. So it's the perfect blend of ideas and opportunity. And I want to thank you once again for attending, and enjoy the rest of your evening. Thank you.